Good morning and welcome to the Killik podcast for Friday the 22nd of April. So no change at the ECB yesterday. So the market rally has coincided with a bit of a sea change in policy from central banks where they seem to be acting together. This increased sensitivity to the negative consequences of contradictory policy on global growth is starting to reduce the risk premium in equities, which is good for markets. So the ECB seemed to be more sensitive to the impact of negative rates on the banking transmission mechanism, which is obviously a good thing for the banking sector there. And the US FOMC seem to be operating within a band where they're aware of their peg to the Chinese currency, and a stronger dollar will put pressure on the Chinese economy, which is continuing to be in transition. But they're also aware of a very weak dollar will put deflationary pressure on Europe. So we're getting this sort of more consistent muddle-through approach from central banks. And as a result, we're getting less volatility in currencies, as we can see here from the major pairs, which is allowing a bigger risk appetite. Over the course of the first quarter, we have seen a gentle devaluation of the US dollar against all the other major currencies. And that has been closely correlated to a rebound in equity markets. So here we've got the MSCI World Index with the US dollar index inverted. And as you can see there, very sort of close correlation. As a result, we've seen markets go higher during a period where earnings expectations have actually deteriorated. So there's been a re-rating of markets. None more so than in the oil sector. So here we've seen a 30% rise in the sector as a whole, but we're also likely to see, with consensus estimates, a 40% fall in earnings quarter on quarter in those numbers as we go into next week when BP, for example, are reporting. So that will highlight the discrepancy between the free cash flow, which is coming from earnings, and the ongoing requirement to pay dividends. So that cover of dividends has also fallen quite dramatically over the last quarter. So that's likely to be something that investors will focus on as we go through the results season for the European integrated oils. Here we've got the Brent Crude futures curve. So clearly we've had this strong rally in oil in the near term in the spot market. But what we really want to see is a rally in the long end of the curve. So this is what companies' longer-term price and equity valuations will price off. And actually, we've seen since the start of the year, we've seen increase at the front end and actually a fall in longer-term estimates for oil in the future. So that creates probably a disconnect between share price action and actual real action within the futures curve. So you get this contradictory message between companies needing to increase production, but also to increase production at higher oil prices to justify current valuations, which makes us slightly nervous. So the sector is now trading on 18 times earnings, whereas through 2011 to 13, we are averaging nearer 8 times earnings. We also noted over the last couple of weeks the underperformance of the UK domestic cyclicals. This is clearly concern in markets about Brexit. So we've seen general retailers, banks, house builders, travel and leisure all discounting that Brexit result and appearing slightly oversold in the eventuality that we get a Remain vote. Clearly there's considerable doubt and a long way to go before we get to that firm conclusion. But it potentially is throwing up some opportunities in these types of sectors, and we're seeing Lloyd's and Taylor Wimpey report next week. So looking at next week, it is an extremely busy roster of companies. On Tuesday, we've got BP, we've also got Apple, Whirlpool, eBay. Wednesday, we've got Glaxo, Barclays, Boeing, Facebook, PayPal. Thursday, we've got Lloyd's, Taylor Wimpey, WPP. We've actually got Amazon next Thursday. It wasn't last night, so apologies for that in last week's podcast. Expedia, Western Digital, Baidu, and then Friday, AstraZeneca, BASF, Linde, and Sanofi. So thanks for listening. Have a good weekend.